Crypto today is all down. We see that Bitcoin is down 6.3% and sitting at $39,500 at the moment. We see the rest of the market is in the red, with most coins down up to 10%. Anchor Protocol down 20% there. GMT up at 5.5%. Most others down. Doge down 10%, Flocky down 10%, Ape down 10%, Wink down 10%. As we go up, we scroll through. Engines down 10%. Axie Affinity down 8.5%. Theta's down 10%. And as we said, Bitcoin's down 6.5%. And if we have a look at the NASDAQ, down 2.5%, nearly 2.3%, the NASDAQ. So it's a red day. One thing we do have here is this supporting trend line, which Bitcoin is sitting right on at the moment. Previously, when Bitcoin has tended to hit this line, it's rebounded away. So let's see if that is what's going to happen in the next 12 hours. Are we going to see a rebound to the upside from Bitcoin, or are we going to see it to continue to break downwards? That's something we'll have to wait for. If we go over to today's news, let's have a look at what is happening in crypto today, April the 12th. And this article here, 72% have surveyed financial advisors to invest in crypto if the US has spot ETFs. According to a recent research conducted by the NASDAQ, 72% out of 500 financial advisors will be more likely to invest client funds in digital assets if the US watchdog greenlights a spot ETF. Among those already part of the market, 86% said they will increase their exposure over the next 12 months. So if we get a spot ETF available to all these institutional and financial advisors, then we can see cryptocurrency being opened up to the total market and financial advisors being able to invest their clients' funds into crypto. Recently, NASDAQ determined that if such a product is offered, it could create a fresh wave of investors among financial advisors, specifically 72% that answered yes. If there was a spot ETF, they would use clients' funds to invest. It's good that they want to get crypto done right and see that crypto investors are looked after. But it may be that they also see crypto as opposition to their existing financial networks. Let's have a look at the Bank of America. Bank of America warns of dire recession that could see cryptos rocketing to new highs. So their opinion is that if a recession comes, money leaves the existing financial sector. Where's that money going to go? It could go into real estate, but real estate could drop as well. So the investors see cryptocurrency as a hedge against inflation, a place to put their finances. Last week, the Federal Reserve signalled it will likely start slashing assets from its $9 trillion balance sheet at twice the rate it did on its previous quantitative tightening exercise. Okay, so interest rates to go up by 50 basis points. That's the warning. So interest rates go up, could stall the stock market, property prices drop, and where's the smart money going to go? In this article, they say it's going to go to cryptocurrencies. That's yet to be determined. Because currently at the moment, when the stock market falls, cryptocurrencies are falling as well. So this is a speculative statement. So will cryptocurrency go up if stock markets and property prices fall and interest rates rise? That's something yet to be seen. Nobody knows the future. It is potentially something that could happen, and it's being spoken about now. So let's see what happens with that. Bank of America. Okay, Ethereum devs now testing ETH 2.0 upgrade on the shadow fork. The Ethereum devs have created a shadow fork of the mainnet to better test the merge that will transition the network to a proof of stake model. The Ethereum Foundation got a step closer to deploying Ethereum 2.0 and has been using shadow forks to make its testnet more closely resemble the Ethereum network. We're testing POS on Ethereum. Marius van der Wiggen, an Ethereum software developer, said on Twitter this morning, today will be the first mainnet shadow fork ever. Okay, so the shadow fork's been done and it's looking good. So Ethereum moving from proof of work to proof of stake in the near future. The Ethereum 2.0 upgrade's been in the works for a long time. The first phase, called the Beacon chain, went live on December 1, 2020. The next phase, called the merge, is still in the works and expected to be completed by Q2. So it's looking a lot closer to Ethereum 2.0 proof of stake being a reality. Okay, let's have a look at another article here. More commentary about the same thing. And here we see the Beacon chain currently has over 340,000 validators, which represents a gain of 13% from early March, when the 300,000th validator was first recorded. Okay, so even though Ethereum moving from proof of work to proof of stake, validators are increasing. So the network is growing. Validators see it as a profitable opportunity to get into Ethereum and money to be made in the proof of stake model. So looking good for Ethereum in the future. Here we have Meta. Meta starts building a digital economy for creators in Horizon Worlds, their digital-owned virtual reality game. So the Meta platform digital economy got rolling Monday with new tools for hawking virtual goods in the social media giant's virtual reality game. So Meta looking to build its own metaverse, and as you can see from this article here, their main focus is making money. Not can they make a fantastic metaverse that people can use and enjoy, but how much money can they make out of it? Okay, they're a business, they're looking at the business potential. And Mark Zuckerberg said in a video, clearly the ability to sell virtual goods and be able to take them with you from one world to another is going to be an important part of future metaverses. So they want to sell characters, sell the accessories, and then be able to use them across different metaverses. If you can use your characters and your accessories across different metaverses and across different social media and different internet platforms, then obviously the value of that character or that non-fungible token increases in value. Coinbase is launching a Bored Apes themed film trilogy. Coinbase launched an open call for all Bored Ape Yacht Club NFT holders, hoping theirs will be cast in an upcoming film series. The exchange announced on Monday the upcoming production, which will be divided into a 3-part series called the Den Trilogy. Ape owners selected in the casting process will get a licensing fee of $10,000 in ApeCoin or Bitcoin, according to the film's website. The license will be recorded on-chain and will continue with the ape into the secondary market. A 3-part movie series where apes will be featured. If your ape gets featured, you get $10,000. This all results in keeping Bored Ape Yacht Club at the top of the NFT market. So another reason for investors to invest in Bored Ape Yacht Club. And if your particular ape was chosen to be part of the series, then of course your particular ape will go up in value much more than the $10,000 that you're going to receive. The film is set in the 2020s in a chaotic midtown Manhattan, when for the first time digital goods and services have outpaced all other indicators as a measure of value in the market, according to the prologue. Okay, so Coinbase said that although it is unlikely they will profit from the film, any net proceeds would be donated to a non-profit organisation. Well, that's nice of them to do that, isn't it? There obviously is something in it for Coinbase. Coinbase promoting Bored Ape Yacht Club. If we move on, mastercard files trademark applications. So mastercard wanting to get into the metaverse. Mastercard has filed 15 trademark applications related to the metaverse and NFT space. According to Mike Condotis, mastercard made this move as they plan to go into the metaverse soon. Okay, so existing card services like Visa, MasterCard, PayPal, all seeing they have to get into the metaverse, all seeing they have to upgrade their current models or else they're going to be left behind. A good example of this is the current movement in Strike using the Lightning Network and Bitcoin to send money worldwide at minimal fees. So the writing's on the wall and the current card providers can see what's coming and they're going to get in on it as well. So there's no choice for the likes of Visa, MasterCard and PayPal. They have to get in on the new financial system or they're going to be left behind. We'll see how that works out for them. And to finish up today, we'll have a look at the Bitcoin rainbow price chart. And we can see we're still in the still cheap area of the rainbow, more towards the bottom side. And if we continue to drop, according to this chart, we'll move into the accumulation stage. So while no one likes to see the price of Bitcoin go down, if you're a Bitcoin believer, what it is a great opportunity to buy more and get into the market at a discounted price. Okay, well, that's it for now. Let's have a quick look back at Bitcoin, and there we go. We see a slight green candle starting. We're still sitting at $39,600. Will we see a rebound for Bitcoin today? Possibly. Let's hope so. The actual indicators are showing a good chance of a rebound for Bitcoin today. All right, if you like this video, then if you could give us a thumbs up, that'd be awesome. And if you could subscribe to the channel and hit that bell so you'll be notified whenever any future videos come out. Some days we even do 3 or 4 videos in a day, but there's always at least one that you can rely on. So hope you enjoyed today's video and we'll talk again soon. Bye for now.